All right, let's talk about crypto charts. If you've ever pulled one up and felt like you were staring at a completely different language, don't worry, you are not alone. And we're going to fix that right now.
Seriously, right? It's just a wall of flashing green and red lights, jagged lines, numbers flying everywhere. It can feel super intimidating, but I'm going to let you in on a little secret. It's not a secret code at all. Every single chart is just telling a story, and today, you're going to learn how to read it.
So here's our game plan. First, we're going to break down the basic anatomy of a chart. Then we'll zoom right in on the most important part, the candlesticks. After that, we'll learn how to spot the bigger picture, the market trends. And finally, we'll put all the pieces together so you can start reading these stories for yourself.
Okay, first things first. Before we can even begin to read the story, we've got to understand the page it's written on. Think of this as the canvas. Every chart has a few key parts that give us our most basic, most crucial information.
That line running up and down the side, that's your price axis. It's really simple. The higher up you go on the chart, the higher the price was. This is our fundamental measure of value.
And the line running along the bottom, that's the time axis. This tells us when everything happened. You can change this to look at the last minute, the last hour, the last day, or even the last few years. Price and time, those are the two coordinates for everything we're about to look at.
Now see those bars at the very bottom? That's volume. It tells you exactly how much was being bought and sold. A really tall bar means a ton of activity. Think of it like this. A big price move with a lot of volume behind it, well, that's the market shouting. A move on low volume, that's more like a whisper.
Okay, so we've got the canvas down. Now it's time to meet the main characters of this whole story, the candlesticks. It's kind of wild how much information is packed into each and every one of these little bars.
What you're looking at here is called a Japanese candlestick, and each one tells a tiny story for a specific period of time. So if you set your chart to a daily view, each candle represents one full day of trading action. If you set it to 1 hour, each candle is 1 hour. You get the idea. They're the basic building blocks of the entire chart.
And the story they tell is actually really simple at its core. If a candle is green, it's bullish. That just means the price ended that period higher than where it started. The buyers were in control. If it's red, it's bearish. The price ended lower than it started. The sellers won that round. That's it. Green for up, red for down. Super straightforward.
But how do they show all of this? Well, every single candle gives you 4 key pieces of info. That thick part, that's called the body, and it shows you where the price opened and where it closed. And those thin little lines sticking out the top and bottom, those are called wicks. They show you the absolute highest price and the absolute lowest price that was reached during that time. So in one tiny little shape, you see the start, the finish, and the whole journey in between.
Okay, so now we know how to read the individual words, the candles. The next step is learning how to string them together to read the sentences and understand the overall plot. This is what we call spotting the trend.
And really, there are only 3 things the market can ever be doing. It can be in an uptrend, where you see the price making higher peaks and higher valleys. That's a sign of optimism. It can be in a downtrend, making lower peaks and lower valleys. That's pessimism. Or it can just be going sideways, kind of bouncing between 2 levels. That shows indecision. Your first job when you look at any chart is to figure out which of these 3 plots is currently unfolding.
Now, within these trends, you'll start to notice key areas called support and resistance. The easiest way to think about them is as invisible floors and ceilings for the price. Support is a price floor where buyers seem to always show up and stop the price from falling further. Resistance is a price ceiling where sellers tend to take control and push the price back down. Spotting these is absolutely key.
All right, let's bring this all home. We've talked about the axes, about volume, about what each little candlestick means, and how to spot the overall trend. We've literally gone from staring at a confusing mess to understanding the core pieces that tell the market story.
So here's your cheat sheet. If you forget everything else, just remember this. Green is up, red is down. Simple. The thick body is the main journey from open to close. The skinny wicks are the adventures it took along the way. Volume tells you how much excitement there was. And always, always zoom out and find the overall trend. That's your context for everything.
Look, at the end of the day, a chart isn't some magic crystal ball. It's just a visual story of supply and demand. It's a map of human psychology, a tug-of-war between people who think the price is going up and people who think it's going down. And your job is just to learn how to read that story.
So the next time you open up a trading screen, don't see a secret code. See a story that's waiting for you to read it. You have the key now. The only question is, what story are the charts going to tell you?